Good afternoon and welcome to another video from Lots of Options. It is May 31st, 2020, and we are going to delve into a couple of different charts and graphs and everything else in terms of stocks to develop our narrative and our ideas as they may present themselves over the course of this week with regard to market movement. As you can see from the NASDAQ 100, we had a very good closing on Friday. We basically moved up from the 9,400 level at one point in time during the day, all the way up to close at 95.5872, somewhere in that range. The velocity of the move was just incredible going into the close. We spent most of the day just chopping around. On Friday and late day Thursday, the range was rather tight between 94.83 and 93.85. There were, of course, spikes in different directions. On Wednesday, we traded at a low of 91.72, and that, of course, took us up to a high of, again, very close to the 9,600 mark of 95.19, somewhere in that range. As you can see from all the different charts, we're basically all the different angles of the chart that we're looking at. You can see that the trend is clearly up. The market wants to move up. You can see that from the velocity of the number of buyers that came in on Friday afternoon as the market was closing. Traders didn't go ahead and liquidate positions. It appears as if they went ahead and initiated positions, because there were plenty of times during the course of the day when they could have gotten out of their shorts and gotten into longs or gone flat over the course of the day, such as at the 93.90 level, which was probably the low for Friday in that respect. So as we're taking a look at the chart, it was a monster move into the close. We did have other times during the course of the week where we traded very close to the 9,600 level as well, 95.74, which occurred on Thursday, and actually on Monday as well, we traded in a very similar range. While that may appear range bound, from Wednesday all the way through Friday, we were consistently making higher highs and higher lows, which is the definition of an uptrend. As we're taking a look at these different things, we have to take into account the fact that the underlying stocks that were moving the market were also turning around at the very same time. And that has to be part of our narrative as well. We see buying into the close, trend line is up, the velocity of the trend line is very deep. So people were buying fast and furious, at least from what we can see here on this chart. And we're not going to go through a market profile chart today, but based upon what we can see here in terms of how much time price spent in a certain range, it looks like from the 9,400 to the 94.83 range, we were basically within those ranges, moving through the 50 period moving average, the 200 period moving average, and the 20 period moving average. We moved through all of them, and we moved through all of them just very quickly, very hot, very fast, and it was all to the upside. The buying was to the upside, and new positions appear to have been initiated. Taking a look at what happened earlier on in the week, and also notice, by the way, we moved up from basically the midpoint of the lower half of the second standard deviation all the way to almost the top half of the second standard deviation, which is a move basically 3/4 across the chart. Based upon the way it's formatted. So again, a lot of buying was coming into the market. Traders were happy, and traders were looking to go in and initiate positions. Doesn't mean we're not going to gap down on Monday and we're going to have some retracement. Doesn't mean the market is not going to try and balance itself out before it tries to make its next new high. Nothing moves straight up, nothing moves straight down. Everything moves in zigzags. However, as the saying goes, we're going to buy the valleys and sell the rallies. And we're going to do that with credit spreads and butterflies and other types of options by moving outside of support and resistance areas. Now, let's take a look at the NASDAQ, the S&P futures, which are the ES. Okay, the ES also, a lot of buying into the close. We've got a low of 29.19 Friday afternoon. So Friday afternoon, and we move up not as fast and furious and not as strong a close to 30.58. However, you have to remember that the market is still digesting the 200 period moving average move above the 3,000 mark, which started somewhere around the middle of the week. And again, it's very natural for the market to chop around the particular point of resistance or point of support and to a large extent gain momentum before making its next leg higher or its next leg lower. The all-time high is much greater than what we have right now in the chart, but in terms of weekly numbers, we can take a look right here. We are at the 3065 level, and that 3065 level puts us in a position where we can retest the high, so we have a little bit of room in there between 3057 and 3065, which was our high on Thursday afternoon. And you can also see that we move from a low of 2093 all the way up to a high of 3061 for the close on Friday. Again, trend line is higher. We're breaking through the middle of the standard deviation channel. There might be some resistance in here. It might be that we move back up to 3065, we move back up to 3080, which is again why you'd want to place your trades if you're doing credit spreads at the 3085 range. You also want to be patient and wait to see what the market gives you. If you have the ability to sit and watch the market, or you're auto trading with lots of options, or you're in the process of taking our SMS trades and we're sending them to you, and this is the way you decide to go with your trades, because you have to make that decision on your own. We're simply providing the information from what we're doing in our own account. While we're watching the charts, we wouldn't necessarily go ahead and make a trade above 3100 or even further than that until the market gets back to 3065 or 3070, and then go ahead and place the credit spread above there. It's very difficult if you're not watching the market on a fairly regular basis, if not all day long, to go ahead and take advantage of the moves that we do in our own account, which is why we offer the SMS alerts and why we offer auto trading. So you have the ability to go ahead and take advantage of what goes on the screen without being in front of the screen. But again, going back to the analysis, if you're looking at the analysis from a purely technical perspective, we're above the 50, we're above the 200, we're above the 20, we're above the second standard deviation channel. In terms of trend line resistance, we may have a little bit of trouble at 3065.50 momentarily. We don't have much action in terms of the actual consolidation move. If you look at every single time the market moves up or down, it's basically a zigzag. So what you have is you have an up, and then a down, and an up, and a down, and an up and a down. So all these zigzags are very important because that's the market getting itself back into balance before it makes its next move. As some traders say, you always have a series of low volatility moves, and then when the trade breaks out of the consolidation area or the chop area or the area of balance, you're going to put yourself into a position where the market is going to move. There's going to be enough volume, enough velocity, enough momentum to go ahead and move prices in one direction or another. Which is why channels work very well. Which is why narrow channels around narrow price bands work very well as a trading mechanism. Now we're going to go ahead and we're going to take a look at just one or two of the Fangman stocks. Again, trend is up. We can see this here. We can see that the stock is actually in a consolidation pattern. Stock is moving upward in the consolidation pattern. If the stock breaks up, next level on a short-term 15-minute chart. And again, you can look at charts in many different ways, but you should be consistent in the figures that you're using. Next level is roughly around 1441. 1440, 1441 is a level that we hit twice last week. So if we break above 1432, 1433, we can probably pick up 8 points, 7 points, somewhere in that range. That's a nice place for a butterfly or an unbalanced butterfly or a ratio trade. And again, this is why we offer our service. But if you're trading on your own, look for these patterns. Look for the zigzag. Look for the time of consolidation. And then look for the breakout. And trade the direction of the breakout. Don't look to scale into positions that are moving in the opposite direction of the breakout. So if the breakout happens moving from here to here, meaning from the bottom of the channel toward the top of the channel, take the trade going from the bottom to the top of the channel. Don't look for a fade back, but you do have to look for price acceptance. But price is already being accepted in the 1471 to 1432 range. So if we know price is being accepted in that area, well, then you should start looking for trades in the 1405, 1400 range in terms of a nice credit spread. Look above the standard deviation channel, the 1451, 1452 area for a credit trade. And also look for a nice or as small as possible in terms of debit trade when you're looking at the 1432 to 1440 range, because you do have those 7 points between place A and place B, which you can get it into with a nice butterfly. And the sale of the calls will be offset by this purchase of the calls. Again, using one item to finance another item. And by not going into the trade by simply purchasing shares, you're putting yourself in a position where you don't have to be as concerned about the amount of capital that you're investing. One of the reasons why lots of options is in business is because it is a capital efficient way of doing business. And that really is one of the most important things. If you'd like to join our community, if you'd like to learn more about what we have to offer in terms of education, in terms of videos, in terms of our profit and loss, visit our website at www.alloptionspreads.com, www.alloptionspreads.com. And I wish you a very good weekend, and come and join us today so we can all work together. Thank you.